Welcome back. The Abu Dhabi Securities Exchange received a high-level delegation from Qatar, which was headed by the CEO of the Qatar Exchange, Rashid Al Mansouri, in order to strengthen economic and commercial cooperation. So before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, Dubai's non-oil foreign trade rose 13% in 2012, reaching 1.235 trillion dirhams, up from 1.089 trillion in 2011, as announced today by Dubai Customs. Officials revealed that the figures come off the back of an increase in exports value by 47% to hit 163 billion dirhams, a rise in imports by 12% to reach 737 billion, while re-exports registered a 5% growth rate to 334 billion dirhams. They added that the results demonstrate that trade remains one of the fundamental pillars of the economy. His Excellency Ahmed Buti Ahmed, the Director General of Dubai Customs, stated that the direct trade made up around 65% of Dubai's total non-oil foreign trade, amounting to 808 billion dirhams, while free zones made up 34% at 417 billion, and customs warehouses trade recorded 10 billion dirhams, 1% of the total non-oil foreign trade. He also revealed that China topped the list in terms of import partners at 111 billion dirhams.
Regarding the trade, there is an increase of 13% compared to the last year. We reached 1 trillion and 235 billion dirhams. That is considered as a very big achievement, what we reach right now. The trade, it's with the GCC countries also. There is an increase of 28%, reached 95 billion dirhams. There is also the trades with India, which is considered our partner. Is the biggest partner we have, and then comes after that China, Switzerland, and many other countries that, like also we have very big trade with them.
Abu Dhabi Airports Company confirmed today that sales at the Abu Dhabi Air Expo 2013 reached in excess of 3 billion dirhams. The region's only general aviation exhibition, which ran from the 5th to the 7th of March in its second year this year, also saw a 30% increase in attendance, with 13,000 visitors and 160 exhibitors from local, regional and international companies. Some of the announcements included a 7-year contract between ADAC and Global Aerospace Logistics to provide civil air navigation services at ADAC's 5 airports, starting from the 1st of May this year, as well as an MOU between ADAC and Royal Jet to expand their operations. And women invested 13.3 billion dirhams into the Dubai property market last year, 23% of the Emirates' real estate sector. Data from the Dubai Land Department shows that 5,434 women invested in property, up from 4,704 who spent 10.5 billion dirhams the year before, making up 22% of total investments. Property analysts were quoted as saying that they are witnessing a positive shift, as home buyers today are single women and the number is growing. They added that many are spending money from business capital and that greater access to market information, the desire to be financially independent, and banking services directed towards women are all contributing to women's interest in the property market. Meydan and Mir Hashim Khoury LLC launched a 150 million dirham project today to introduce Kent College Canterbury campus to Meydan. Officials stated today that the partnership will round off Meydan's hospitality and horse racing facilities with healthcare and education options, including a new Kent College Canterbury campus. The collaboration will see a multinational school facility for grades 1 to 12 under the British curriculum, where students will be able to enjoy the facilities at Meydan, from the horses to additional sports on offer. Kent College Canterbury is over 100 years old in the UK, and officials are hoping this new venture will add to the educational community here in Dubai through its vast experience in education. The campus will be managed and operated directly by Kent College and will be built on 400,000 square foot of land, with construction expected to start in the third quarter of 2013 and finish by June 2015. The college is expected to start enrolling students in February 2015 for the 2015-2016 academic year.
Dubai offers a lot of good schools. We have King's School, we have a lot of good schools here. So by bringing Kent to Dubai, it will be added value to the education in Dubai. And because we are going to build this school on a very new land, so we are aiming to build it at a very advanced technology with a good campus, providing all kinds of new technology to be available to the students who will be joining this school here. Schools have to play a bigger role in educating, bringing the children up to what the society needs. So that's why we are looking for high qualified schools like Kent, who can help the society to look after these children, where their parents are, sometimes they have a working mother, their father is busy. So the children will spend more time at the schools, at the campus, and get more discipline and education from the school.
And looking to other business news now, markets awoke to news this morning that Cyprus and the Troika agreed to a deal. In a last-hour announcement, Cyprus secured €10 billion to avoid a disorderly bailout. The country has seen its banking sector closed for the past week, and the uncertainty has weighed heavily on higher-yielding assets. But the latest announcement had a positive impact on risk markets. So to get the details of the deal and the potential impact on the markets, we earlier spoke to Gaurav Kashyap, the head of the DGCX trading desk at Alpari Middle East.
Markets kick-started the trading week to the announcement that the Cypriot government had agreed to terms by the Troika. What this means is that Cyprus now will in fact have access to the €10 billion tranche of bailout money. Stars definitely must be awarded to the Cypriot government for accepting the lesser two evils, going with the bailout as opposed to going through a disorderly exit from the Eurozone. Now, if we look at some of the terms and conditions of the bailout, we're not terming it more along the lines of a tax or levy, which was announced last week, but more along the lines of a bank restructuring. The ECB is trying to trim as much fat off the Cypriot banking sector as possible, and as a result, we're seeing the second largest bank, Cyprus Popular Bank, being pretty much wound down. Now, that's owned about 85% by the Cypriot government, along with senior bondholders, and these will be affected the most. Also, deposits under 100,000 will be untouched, but those deposits above 100,000 will probably face will face the maximum brunt of these negotiations. The disclaimer to all this will be, of course, the fact that what impact will this have on future bank runs? Of course, these tough cuts will have a very, very negative impact on Cypriot growth. which although does represent 0.5% of overall Eurozone GDP, it will definitely see the country enter into a recession. With the elephant now out of the room, we can turn our focus back to the global growth story. Wednesday sees the release of the Q4 UK GDP reading, expected to remain unchanged, contractionary at minus 0.3%. This will be followed by Thursday's US GDP reading, which is expected to come in at a much stronger 0.5%. Overall risk sentiments will remain at a slight premium. We expect markets to remain range-bound in the week ahead.